Welcome guys to another video. In this one I'm going to break down the trade I took and shared in my Telegram group on Friday 30 November, and that was a clean market maker buy model that I've explained in a previous video, and we have many videos available for free to learn this model. And I will do a full breakdown of how I start my analysis, my high time frame analysis to the lowest for the day, and view my setup and my trade. So the high time frame analysis is done means the highest, like the monthly. I start on the monthly. That's done a few times a month because the monthly candles moves very slow, so we don't need to be analyzing every day. But this was my overall analysis since I think the previous 2 months. That first of all, we have the monthly chart here, time frame. So we see clearly that this swing here has broken all this structure. So we are currently in a bearish market that is retracing back to premium and continue lower. So the overall drawn liquidity is this low here, but that's on the very high time frame. Then I focus on what's going on right now. So I was focusing first on the price coming back to premium. This was around July, May, June, July, and the price came back to premium, rejected this tiny fair value gap here, black, let's put it black, and here this is the tiny fair value gap that rejected perfectly and then started coming lower. So it's fulfilling the market structure, making the lower high and now going for the possibly new lower low. So after this we can drop down to the weekly, and in the weekly also we see two things. We see first this swing here that has to come back down to discount to continue higher, and we have some fair value gap here, but this is all more for the long term run. So what's going on right now is the same thing. We have that price came back up, making a high bullish trend on the weekly for the retracement of the bearish, came back to that PDRA premium and then rejected, creating market structure shift. So what's next? Retracement and continue lower, right? And eventually to this low. But how I say this is long term, we have to adapt. So price can come here and then switch and go over this, and then the monthly would change. So we have to focus on what's going on, and this is very long term, so we just go adapting according to when the price develops. So right now we are in this, so I can remove all this, that's not necessary. Even the monthly, now we know we have premium, we've rejected this PDRA, and this is our swing. That's why I was bullish. This was another reason I was bullish when we are here down. People were thinking we'll just continue bearish, but when it broke this important structure, we always need to see a retracement. That's a healthy market. Like here, market broke structure, retraced. Market broke structure, retraced, but more than what it should, and it broke this structure now. So now retracement down, like this until it changes, it shifts. So this premium was needed to be hit, and I think in a previous video I explained it as well. And then we have PDRAs over here. We have this inverted fair value gap, inverse fair value gap here, that is right now there, and possibly the week closes below it, that we will see. If it closes above, we continuing higher to premium. It's most probable. So after this we can drop down to the daily and focus on what's going on. See here the bullish trend that everyone was bearish, and it switched here. It made a higher high, higher low, higher high, higher low, higher high, higher low, and this was a really fast run on the Tuesday 14 November. So now we can expect a retracement and continue higher till wherever price wants to arrive and stop. So after this bullish structure came back to premium in the weekly, I could expect price to stop in a previous price action period, right? Like for example, here we have this daily order block that we see how the Tuesday candle stopped perfectly there, closing below it. So I've had this marked as order block. Now I'll delete this, and after this I was bearish. After Tuesday I was bearish because I would expect this to react like a retracement at least till the discount of this level and filling this CB or fair value gap, that if we see it's almost there, the 50% of the fair value gap, that's the CE, consequent in encroachment or enroachment, something like that, not sure, I just call it CE, and that would be at least my target, bearish target, to continue higher. So knowing that, we go down to the 4 hours, and price here was quite ugly, but it's normal after this very big push. It's how price is fractal. It's just making the pattern at a high time frame, like 4 hours. Like we have this push, then comes down, and it won't just like go down immediately. It has to create some sort of pattern, not always but most of the time. So it comes down, now it made this higher high. So this is basically an entry pattern, right? That's explained in the previous video. It's called the 2022 model, the liquidity purge, market structure shift, etc. So it's possibly creating that. So after this I just dropped down to the 1 hour, and I was looking at what's going on here. So considering what I just explained, we are bearish. This is our swing, this was our current swing low here, and now it's just retracing back up to possibly fill in this liquidity point, fair value gap, like a turtle soup entry on the 4 hour and the 1 hour, sorry, and continue lower to fill in that discount and those fair value gaps. And then eventually we will see if it wants to go higher, lower, whatever. But that's the bias for now. So having this in mind, I could see that this over here was buy side. This is a buy side liquidity, and even this all, it's a buy side liquidity. Okay, price was here down at this moment, so I saw this liquidity sweep, and plus on the daily, I didn't mark it, but we had that huge BC fair value gap, and also this inverse fair value gap here that was overlapping. Okay, so it's a good reaction POI. So I had this marked up and this sell side liquidity being taken. So I was expecting price to come back up, take this liquidity, possibly this liquidity, and then continue lower. So once I was on the London session, we could see here at 3 AM a beautiful market maker buy model. All this here clean liquidity, even this one up, but this was the most obvious, price coming down and then waiting for the reversal pattern to buy back up. So in the 1 minute I saw price taking that liquidity from maybe this was marked up on the 1 hour, like here. Price took this liquidity, but dollar didn't took the high. So that's SMT. That's another topic. You can use it or no, but it gives extra confluence. Like euros, if euros taking a low dollar should take a high, but dollar failed to take that high. So that's like, this is like liquidity grab manipulation. You can see that they're manipulating here. That means it's going higher. It gives you like extra confidence and more like a advantage. Like it makes it stronger probability basically. So that was also added to me, and then I was just waiting for my pattern. It was not very clean, but it was there. We have lower low, lower high, lower low, lower high, lower low, and break of this high. So it's the same thing. Liquidity grab, break of the high, come back, and then you can enter anywhere here. It can come back to this, anything. You actually don't know where it's going to come. You have a better entry, worse entry, but we can see here, just tap this fair value gap and blast it up. So I didn't enter. I was not going to enter here because you have to accept a stop loss till here, right? So it's a very huge stop loss. So what we do in these cases is we just wait, we be patient. So what happens here is price comes back down, fills in this fair value gap. Here we could have entered because this is the market structure shift. This was the market structure shift, and this I have tested on my own, and it works quite well. That the PDR rate that breaks the market structure shift, in this case this fair value gap, holds price. So you could basically enter like this on this fair value gap and put a stop loss just here under 2 pips. But I didn't enter here as well. But this I've back tested and it works quite well. I think it's kind of a breaker block, something like that. But basically it's that the PDR, if a fair value gap breaks market structure, that fair value gap becomes very strong for holding price. Basically is that. So where did I enter? I waited for all this, and then I saw my pattern once again, like price coming up, higher high, sweep, liquidity sweep, and then break the high, and then I entered here. This was my first entry, and price started trading up. So I entered basically over this fair value gap here. My stop was here below, and this was the take profit. This was the first entry, 2.47, and then you had multiple like entries to scale in. You have another break here. Each time price for breaking structure, you could use those PDR rates to enter. Like we have this fair value gap here, being respected, it broke, then a new inverted fair value gap being respected, it broke, another fair value gap, this and this one here respected, then we had another fair value gap here, and this tiny one here, it came back down to all this one, right, respected. Oh well, this is the one now. I'm seeing it now. The one we would have entered was this. That was the one, right? Yeah. And then it hit and it touched the buy side liquidity, and then it's come down and that's continuing up possibly to this buy side liquidity. So basically all are these entry points. This was a little bit not very clean, but what you can do is just keep it clean for yourself. Like if you don't see it clean, just stay aside until you see it clean, like how I did here. Like this, I was not liking much. I wanted a lower price. If it would have come like lower here, this fair value gap or this, I would have entered because my stop loss is really small. But how it just continued going, I said I'm going to scale in. I got my entry here, I got my entry here, and even here, the last one. And obviously the stop loss would be adjusted. Like for this entry here, stop loss would be here down. For entering here, stop loss would be here down. And for entering here, stop loss would be here down. And so on. So basically, what we're seeing here is a market maker buy model explained in my previous video. We have the sell side of the curve, smart money reversal, buy side of the curve. That's the market maker buy model. So I hope you like this video, you find it insightful, and see you in the next one.